On the program today, Zimbabwe's president warns end is coming for economic detractors. South Africa's budget deficit seen highest in the post-apartheid era. And Zambia's inflation slows for the first time in 15 months. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. First, the market. And the mood in the market we track here on the African continent looked subdued at intraday. The Nigerian Stock Exchange was unchanged. South African JSE index was down 0.76%. Egypt was down 0.80%. And Kenya closed in the negative on Wednesday. And major Gulf stock markets traded lower at intraday with Saudi Arabian shares hit by an International Monetary Fund forecast for a deeper than anticipated recession in the country. Saudi Arabia's benchmark index dropped 0.15%, with RG Bank falling 0.7% and petrochemical company Saudi Basic Industries down 1.5%. The Saudi economy will shrink by 6.8% this year. Qatar's index eased 0.44%, with Qatar National Bank losing 0.9% and commercial banks shedding 1.1%. In Dubai, the index declined 1.02%, with its largest bank, Emirates MBD, declining 1.7%, and Emma Properties down 0.7%. The Abu Dhabi index retreated 0.61%, pressured by a 1.6% fall in the country's largest lender, First Abu Dhabi Bank. And the European markets turned positive in the morning trade as investors digested the latest economic forecast from the International Monetary Fund and a record spike in coronavirus cases in the U.S. But there are other corporate news also driving sentiment, and Chelsea will feed us in. Hello, Chelsea. Good afternoon. A historic day for Germany's Lufthansa. Shareholders vote today on a €9 billion bailout of the airline. What's the latest on the vote?
Well, shareholders are still holding the meeting where they will vote on this bailout. They are expected largely to approve the €9 billion bailout, which is extremely crucial for Lufthansa's future. The company has been losing around €1 million an hour throughout the coronavirus pandemic because it had to ground the majority of its planes. So what we heard from the CEO today during this meeting is that the company is out of money and it really does need this bailout approved. There has been a lot of opposition coming into this decision, though. One of Lufthansa's largest shareholders had been threatening to vote against the bailout up until last night, where he seems to have changed his mind, and that should give Lufthansa enough support to pass this measure. A lot of the big concerns for investors in particular center around the 20% stake that the German government would get in the company because of this bailout package. That would obviously dilute the value of all of these other investors, their investments in the company. But I think for investors and also for employees, this really is the lesser of two evils for Lufthansa. The other option for them is really bankruptcy or insolvency. Thousands of jobs would be lost through that, and it would really, it could certainly mean the end for Lufthansa. So even though many people are not particularly pleased with this bailout package, it certainly is crucial and really the best option for Lufthansa going forward. So we should get these results later in the day, but investors do feel quite optimistic right now.
And German financial tech company Wirecard says it will file for insolvency just a week after it reported it couldn't locate €2 billion that was supposed to be in overseas bank accounts. What does this mean for the company?
This could really be the end of Wirecard. It's been one of the most spectacular meltdowns in German recent history for companies. In 1 week, we saw the company lose almost all of its market value. Its CEO was arrested, and now they've, within a week, applied for insolvency. So they really are having very few options right now. The way insolvency typically works is that there are a couple different options. In one slightly lighter version, they could just restructure and find ways to remain intact. But given just how deep the fraud at this company seems to have gone and how much questions about what was ever really real about Wirecard's business, investors seem to think there's really not a path forward for Wirecard, and we can see that reflected in the stock price today. It's down another 80%. So this could mean the only option for Wirecard is to sell off what assets it has left and really close up shop.
And chemical firm Bayer will pay about $10.9 billion to settle claims that its Roundup weed killer causes cancer. How are investors reacting? Hello, Chelsea. All right, if you can hear me, chemical firm Bayer will pay about 10.9 billion naira to settle claims on the weed killer, of course, which is said to be causing cancer. How are investors reacting? All right, I guess we do not have Chelsea there. We move on now. Meanwhile, the European Central Bank has launched a new facility to protect the financial system from the impact of COVID-19. It will offer euro loans to central banks outside the euro area in an attempt to prevent a shortfall of euros on the market. Let's get a sense of how the London markets are responding to this piece of news. And Juliana would tell us. Good afternoon, Juliana. Well, are investors cheered by the ECB's new offer of euro loans to non-eurozone central banks?
Good afternoon, Chimeze. It's a pretty complex loan arrangement. I'll do my best to chew it over, but I don't know much more than what you stated. But you are right. Investors in the UK were a bit cheered at this information because, of course, anything to help relieve debt is of interest to traders. So it did lift the all-share. What we know is that this new system is called the Euro System Repo Facility, and it's been put in place to ensure that there's enough euro liquidity within the Eurozone. So, as you said, the ECB will now be loaning to other central banks to borrow euro against euro-denominated debt. I don't suspect that the Bank of England will be taking the Eurozone up on this offer, but it did cheer the markets. The all-share is down 0.21%, the FTSE 100 is down 0.12%, and the FTSE 250 is down by 0.71%. In currencies, the pound is up against the US dollar by 0.27%, up against the euro by 0.59%, and up against the Japanese yen by nearly 0.5%.
And on the data front, UK retailers remain very gloomy about their prospects this summer, despite the government's efforts to reopen the economy. Aside from these, what are the other key findings from the CBI report?
Well, yes, it's a gloomy figure, but it's the same gloomy figure that we've been discussing for the past couple of months when it pertains to retail. This survey is looking at the week between the 27th of May and the 2nd of June, and they found that sales are much lower, particularly in the areas of groceries, and a decline also in online sales. There's also a decline in sales for specialist food and drink retailers, and much wider. The survey showed that retail sales have fallen by 37% in the year to June, and that's a huge issue. We did see last week when these stores were opening that there were people queuing outside, but it does appear that there may have been a flash in the pan. Of course, there are some people that don't like shopping online. Of course, they still like the physical aspect of touching your clothes. And I think having been locked up for 3 months, people are excited to do that. But there are some customers and consumers, Chimmy, that are really holding on tightly to their purse strings because they're on furlough, many of them, and they're not sure when they're going to get a decent pay packet again. So a lot of people are not buying as they used to buy. And of course, this is coupled up with the issues that retail have been having over the past couple of weeks. So when that information came out by the CBI, it did actually dip the FTSE at early trading.
And in another development, Jet2 and Eurostar have announced that they will be cancelling some summer flights and trains in 2020 and 2021 due to the coronavirus pandemic. What more can you tell us about this story?
Well, yes, it's due to the coronavirus pandemic. It's not just those two companies. We've seen this across the board, all airlines, all cruise operators and rail. But they're just emphasising that there are going to be some routes that they just won't go to, particularly Eurostar, really popular route for people in Britain to get to France. But it doesn't just go from Dover to Paris. It does go to various other areas across Paris and across France and Belgium. And now Eurostar is saying that over the next couple of months and into next year, they're only going to be sticking to popular big city routes because the demand just isn't there. With Jet2, which is a huge tour operator here in the UK, very similar to TUI, they've actually announced that they're going to be making, well, BALPA, the union BALPA, which looks after pilots, they announced that they're going to be making 102 pilots redundant. So slightly different to Euro. They are doing this because they haven't got the demand from their passengers. It was already a really competitive, overcrowded market before the pandemic. But of course, the airline industry has been completely crippled and some just can't make it back. We've seen tens and thousands of job losses already, and Jet2 have announced that they will be letting go 100 pilots. So, of course, those 100 routes that they would ordinarily have gone to have been axed.
I thank you, Juliana, for those updates. Enjoy the rest of the day. And stocks in Asia Pacific dropped today after the International Monetary Fund slashed its economic forecasts again. Shares in Australia led losses among the region's major markets, with the S&P/ASX 200 falling 2.48%. South Korea's Kospi also saw a substantial decline as it dropped 2.27% to end its trading day at 2,112.37. In Japan, the Nikkei 225 slipped 1.21%, while the Topix index shared 1.18% on the day. Overall, the MSCI Asia ex-Japan index slipped 0.9%. Markets in China and Hong Kong were closed on Thursday for a holiday. And stocks futures were lower in early trade following a steep market sell-off triggered by intensifying worries about the rising number of coronavirus cases. Futures on the Dow Jones Industrial Average implied an opening loss of about 30 points. S&P 500 futures and Nasdaq 100 futures were little changed from the previous session. Trading volumes were thin overnight. The record spikes in new coronavirus cases in multiple states are dampening hopes for a smooth economic recovery. The negative headlines sent the market into a downward spiral on Wednesday. Investors will monitor the latest weekly jobless claims data due at 8:30 a.m. Eastern Time. And global oil market prices slipped in early trade, extending losses of more than 5% in the previous session, weighed down by record high U.S. crude inventories and worries that a rapid resurgence in COVID-19 cases could choke a revival in fuel demand. U.S. West Texas Intermediate crude futures fell 26 cents to $37.75 per barrel after dropping $2.36 on Wednesday. Brent crude futures fell 30 cents to $40.01 per barrel after falling $2.32 on Wednesday. A day earlier, the benchmark contract hit its highest price since early March, just before pandemic lockdowns and a Saudi-Russian price war slammed markets. Wednesday's sell-off came after U.S. government data showed crude stockpiles rose by 1.4 million barrels, driving inventories to a record high for a third straight week last week. And gold edged lower in early trade, easing off a near 8-year high hit in the last session as a sell-off in equity markets driven by a surge in coronavirus cases prompted some investors to dump assets. Spot gold was down 0.1% at $1,760 per ounce, having soared to its highest level since October 2012. U.S. gold futures fell 0.2% to $1,771. In other metals, palladium jumped 0.8%, platinum gained 0.1%, and silver rose 0.2%. And still to come on the program, South Africa's budget deficit on the rise, plus commodities market update. Do stay with us. South Africa's budget deficit will be the highest in the post-apartheid era, and the finance minister has warned that debt had become a hypo eating their children's inheritance. Public debt is projected to be more than 3/4 of gross domestic product as the coronavirus crisis stifles the economy. In his emergency budget speech on Wednesday, Finance Minister Tito Mboweni warned that future generations will pay dearly unless South Africa takes tough action to get in control of its borrowing. Africa's most advanced economy was in recession before the COVID-19 outbreak ravaged the economy, and the lockdown that followed late in March has put further strain on businesses and consumers. In a supplementary budget in response to the coronavirus crisis, the Treasury projected the main budget deficit would widen to 14.6% of GDP in the current 2020-2021 fiscal year, the highest since South Africa threw off the shackles of its globally isolated apartheid rule in 1994. And the price of gas in Nigeria has been a subject of controversy for a long time now, forcing the federal government to recently review the gas pricing policy. Well, let's see what the implication of this would be, and I'm being joined by one of the research analysts with Financial Derivatives Company, Dumebi Iyeke. Hi, Dumebi. Good afternoon. Thank you for joining us.
Good afternoon, Chimi.
Now, the federal government is reviewing the gas pricing policy. How will this move affect the price of LPG and power pricing in the near term?
I mean, the controversy in the gas industry regarding gas pricing, has been in place for a really long time. And this is because, like other petroleum products, gas has been subsidized for a long time now. And, the cost of exploration, the cost of distribution, and, the cost of exploration and, distributing this particular commodity is quite high. And this has limited ample investment in that industry that could have helped, reduce the domestic price of gas within the country. So, this is the controversy that the gas industry is currently facing, amongst other issues. And right now, with the review of the gas pricing policy, the expectation is that the immediate response would be that, the market will react with an increase in the price of LPG, which is cooking gas. And but after a while, once investments begin to trickle in and, we're seeing an expansion in that industry, prices would, go back down. And this would also encourage power pricing because at the moment, one of the major constraints to power generation in the country is gas. So if infrastructural developments within this particular industry begin to pick up, we could see an increase in power generation and power pricing could decline significantly for both the household and businesses.
LPG is an environmentally friendly form of cooking, and there has been a consistent and a slow shift from firewood, fossil fuels, and kerosene. Now, do you think an inevitable increase in the price of LPG will hurt the attractiveness of this fuel and, of course, hurt the environment?
Yeah, I mean, cooking gas, LPG, is, very environment friendly. It's a cleaner fuel to use, especially for cooking. So at this time where, in Nigeria, we have people using firewood, kerosene. So we could see a decline in, a shift rather in, the consumption of kerosene and other fossil fuels towards cooking gas. But should the price increase, which I mentioned earlier, would be the initial response of the market, individuals, would likely reduce their demand for gas. The demand would reduce, but it won't go away, it won't dissipate. So moving to when investments within the gas industry, pick up and prices begin to go down, the demand for cooking gas would pick up again. And, that's what we'd likely see. So households would have, kerosene stoves in their houses, but, their demand for cooking gas would fall.
Maybe, if I may ask, it is a widely believed myth that meals cooked with a cauldron are more delicious than the one cooked with gas. Now, do you see this trend affecting the demand for cooking gas in the near term?
I mean, Chimize, we have a lot of people, especially in our country, that really enjoy, that firewood taste in the rice or jollof rice. We call it party jollof. I mean, and people, people really enjoy it, and the it's something that people we've had for a really long time, and that's because people believe that the aroma of the firewood gets into the food and adds some flavor to the meal. So but the truth of the matter remains that this has always coincided with cooking gas. So we would still see we'll still see the demand for cooking gas increase, especially if the investments within the sector pulls through and prices significantly drop. So we would still see that demand, and the trend, it might have an impact, but not a significant one to, totally drive down the demand for cooking gas. People really love their party jollof. So, I mean, that's what we're going to see.
I'm a fan of that, I must say. Anyway, thank you very much. Thank you very much,
Thank you so
Dumebi,
much
for
for
your
having me.
time.
Yes.
All right.
Yes.
And Standard Bank Group, Africa's biggest bank by assets, faces opposition from environmental activists to its plan to fund an oil pipeline in East Africa. 350.org, an international group of climate activists that opposes the use of fossil fuels, will today hand over a petition signed by more than 20,000 people to the bank's headquarters in Johannesburg. The East African crude oil pipeline is set to traverse Uganda and Tanzania, and the group says this will cause potentially irreversible damage to farmlands and wetlands, and 30 million people in 6 nations will be affected. Uganda discovered commercially viable oil deposits in 2006 and plans to start production in 2023-2024. Total and China's CNOOC own fields in the country. The bank, in its response, says Standard Bank is committed to doing business the right way and supports responsible investment through assessing and managing its environmental, social, and governance risks. Zimbabwean President Emmerson Mnangagwa has warned his government will tackle malpractices that have undermined his government's efforts to end an economic crisis. The comments echo remarks Mnangagwa made 2 weeks ago when he blamed private business for the country's economic woes. Mnangagwa inherited a nation beset by U.S. and European sanctions on its leaders and state companies, $9 billion of debt, and an economy decimated by the state's seizure of commercial farms that accounted for much of its exports. Mnangagwa's attempt to stabilize the economy have borne little fruit. Consumer inflation is running at 786%. The country's recently revived currency has collapsed, and the World Bank estimates the economy will shrink as much as 10% this year. And Zambian inflation slowed for the first time in 15 months in June as the kwacha heard some earlier losses. Consumer prices increased 15.9% from a year earlier compared to 16.6% in May. Costs rose 0.2% in the month, while inflation has been above the central bank's target band of 6% to 8% for 14 months now. The Bank of Zambia expects the rate of price growth to trend lower to the upper end of the range by the end of its 2-year forecast horizon. That and a more stable currency may create some room for the central bank to support an economy that the Statistics Office say grew 1.4% last year compared with 4% in 2018. While the kwacha gained 1.2% against the dollar in June, its total drop for the year to date is 22%, making it the worst performing currency in Africa. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.